Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. Today is Monday, so I'm going to say happy Monday. Hopefully you had a really pleasant and enjoyable weekend. We're going to jump really quickly into recapping some of the stocks I have on my list here. I have about like 15. I'm not sure if I'm going to get to all of them, but we'll try to get to as many as I can. Or I'll try to get to as many as I can. So we're just going to jump in, and we're going to start off with ticker JD. And if I didn't say welcome, welcome and thank you for tuning in. Anyway, so we're going to start off with JD. This is actually a quote-unquote favorite of mine. I've been talking about this stock forever, since it was trading in the low 20s when we first took a position in this stock. When I first gave it as a potential trade idea, the stock was trading at around $19, $20, and I knew just based on the chart we had a real shot at getting a double within the last 2 or 3 months. I've been very vocal in saying that this stock actually has a chance at reaching 40, which is 100% return from our initial entry. So we had a core position. We definitely traded it a lot. And so today that was actually achieved. The stock went as high as $40.99. And so let me just break down what I'm seeing in this chart, right? It's a daily chart, basically dating back to when the stock IPO'd. So that's in 2014. We're in 2020, 6 years of data. For me, that's a lot of data that I can dissect. You can see here a few times the stock bounced off of support. We established support right away when we IPO'd, obviously, and that support level for the most part has remained the same. 1, 2, 3. Hence why I thought once it got back to support around here, I thought it was a good opportunity and time for us to actually take a position. And then most recently, we can say around November of 2019, late last year, I initially said, and that's when I became a little bit more vocal, saying, you know what, 30 to 32 is a good area. If we break above there, there's kind of like these what I call, very little overhead, meaning you don't run into any sort of resistance. And I felt it would be a really easy shot to that $40 level, right? So spent about 2 months or so bouncing around that 32 level. We finally broke free a few months later, a few short months later. We're sitting at 40 today. We went as high as $40.99. So where do I see it going next? Well, right around here. So I think that if we can continue this momentum, you can see again, very little overhead. I see JD hitting 45 and my target where I'll probably start to take profits, because my motto is if your stock is doing well, there's no need to touch it. What a lot of traders tend to do, and I've been hearing this a lot, is that they'll get a bit of profit and they're just such in a rush to take it. Why? Your stock is doing what it's supposed to do, right? It's almost like the opposite. I'm going to stop rambling now because I have a lot of stocks I want to cover. So they kind of do the opposite. With stocks that are losing, they want to give it the most fighting chances. When you should really, if it's not working, something's not working, you get rid of it. When a stock is actually working, you shouldn't be looking to get rid of it. You should be looking to sort of like nurture it. Not even nurture it, just leave it the hell alone. If it's giving you money, why are you trying to rush out of the positions? And so hence why I've been able to hold on to JD for so long, because it's been showing me a profit. Why am I running to get out of it? Anyway, 45 for me is the next level of resistance. I can see it getting there with this continued bull market. And then eventually I can see us in 2020 retesting all-time highs of 50.68. Look out for that. If it breaks, well, not, you know what? I'll get to that point when we get there. So let's continue on. All right, Zynga, another stock I've been extremely vocal on. You can go back and you can listen to any of the videos I did in 2018, 2019. I've been very vocal on ticker ZNGA. When we first noticed or got into this trade, it was trading in the low 3s, right? Right now it sits at $6.77 with today's high, I believe, clocking it at $6.80. That's another stock that has doubled. Why? Because we just left it alone. Like folks crying, they complain, oh, I can't get those big gains, can't get those big gains. That's because when you're in a trade and it's showing you some level of profit and it continues to go up, you're so quick to pull your profits. And for me, I knew that Zynga had the potential to go on to, and I had an $8 price target for 2019. That did not happen. The stock went as high as around mid-6. but it looks very much so that 2020 can be that year where it touches $8. Now, the fact that it didn't get to $8 in 2019 didn't mean that I like closed up shop and got rid of my shares. Why? That makes no sense. The stock is showing me a profit. Just leave it. Leave it until things technically has changed, because I'm a technical trader, or if something that I understand fundamentally has changed within the company, then I'll probably let go of my shares. But at this point, makes no sense to let go. You roll in, you pyramid in, and you let this trade, or your trades that are working for you, continue to work for you. Anyway, this is the daily chart, and it's bullish on so many different levels, right? Like, this is a chart. Let's start from 2012. We're in 2020, so that's an 8-year sort of pattern forming in the making, right? We broke out here in February of 2019 and we didn't dip, so we haven't looked back. So for me, that was fine. I think we're folks, right, because I get these emails and tweets and stuff. I think where some folks were getting a bit frustrated with this stock is because from May of 2019, after this breakout, it spent a bit of time trading sideways. And I did a video, and I'm gonna wrap it up. I did a video a couple of months saying that that's okay. I actually like when a stock trades sideways after it makes an incredible move, or it makes a huge move, because for me, what that says is that the stock is kind of digesting that move, waiting for the next leg up. I don't like when stocks just completely go up or parabolic, because when that happens, granted, you'll get those gains, but when it falls, it kind of crashes just as quickly and just as high in terms of percentage. So anyway, folks got frustrated because the stock has been consolidating, but look, it's breaking out yet again from its base. Right here, you can see the breakout happened most recently around 650, and I definitely think that it's on its way to 8. So JD Zynga, my fan favorites. You can head on over to ShortMeTina, click on my trading watch list, and I talk about some other stocks that I feel can do well in 2020. Let's roll on. All right, and then we have ticker ACST. This is actually an hourly chart dating back to, that's super weird, how an hourly chart going back to 2018. Let's do this. Let's do the daily chart. You'll see a better picture here. Anyway, daily chart going back to 2018. Stock is down 65% on the day. We closed at 76 cents. Went as low as 51 cents, essentially hitting or bouncing off of that near 2-year support. The high of the day clocked in at around $1. Again, the low 51 cents. We had that little bit of a bounce. So for me, if a stock is off 65%, like, that's not a stock I want to hold long term. However, because it crashed so in such a big way today, tells me that at some point within this week you're going to get that 10 to 15% dead cat bound. So from a risk reward perspective, the best area of entry would be around support, which is around 50 cents. It held today. I'm suspecting it will hold at least for this week. If it breaks down 50, then let go. I can see it really spiraling and getting out of control at that point. What else? And then there's a SSI daily chart, another stock that's down huge on the day, down about 56%, down an additional 3% in after hours. I see a quote of around 305. So not quite at the day's low, but 305 gets you somewhere around, I want to draw the line, somewhere around here. So we're sitting in after hours on support in many respects. So heading into tomorrow, you definitely want the stock to trade up above 305, and for it to look the most ideal, if it's going to get that bounce, which it eventually will, right? Any stock that's off 50, 60, 70% in a day usually gets that bounce the next few trading days. You can see you'll get like a 15 to 20% bounce, but for that to actually happen, right, what you want to pay attention to is how the stock is going to open up tomorrow. If we open up above 315, that's an awesome sign. If heading into pre-market, you're actually trading down below the after hours quote of 305, and we even get close to today's low of 207, look out. I think it can get ugly from that point again. What else? And then there's AQST daily chart, another stock that's down huge on the day, 34%. Closed at 436. It's actually down, pardon, that's actually incorrect. It's up in after hours, not down. It's actually up in after hours. I see a quote of 446. So that's like somewhere around here. So heading into tomorrow, you definitely want that sort of momentum to hold into pre-market and regular sessions. If it actually reverses course tomorrow and we start trading down, look out, because the low of the day clocked in at 430. So we're not up that much from today's low, and that's never a good thing when a stock closes close to the day's low. It usually indicates to me that the selling will continue into the next day. So positive sign would be for us to continue that upward momentum heading into pre-market and open session. If, however, the stock actually reverses course and start trading down, I would say to look out. What else? All right, so let's cap it with ticker VRAY. Daily chart. Stock is off about 24% on the day. It's down an additional 1.93% in after hours. I see a quote of $2.80. So despite us closing at 286, it's actually trading at 280 in after hours. So it's actually below session lows of 282. That does not bode well heading into tomorrow. If that sort of selling continues into pre-market and open session, I would say watch out if you're long. Stock has a real potential of kind of like falling back to support. Let's give that a range, 245 to 250. So I would say caution here with ticker VRAY, not looking good in after hours. So again, we're going to cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do 3 things from me. 1, comment in the comment section. Give this video a like if you learned anything from it. 2, make sure you're subscribed at our YouTube channel at ShortMeTina. And 3, right now, just for you, I'm hosting a free 14-day trading course, completely free of charge. You don't have to put in your credit card. I want absolutely nothing from you. I've been trading for about 20 years, and I wish I had someone like me when I first started out to kind of put things into context for me. So if right now you're struggling in the stock market and you just kind of want some little pointers to get you on in the right direction, I think this 14-day free trading course, it is just for you. All you have to do right now is head on over to our website. Again, all you have to do is head on over to our website, ShortMeTina.com, sign up, and become a member. Thank you for listening, and as always, thank you for the support. I will talk to you tomorrow. And when the song was played, the song would set so high, ring through my ears and sting my eyes. Your Spanish lullaby.